All right, I've welcome back for the episode of Carnivore Trades. Today is Thursday, August 3rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, getting that video out just a little early here today. We're going to be covering the Apple, Amazon earnings after the bell with members for our weekly Thursday live stream. So doing the video a little earlier, but I can give you my thoughts on the market here before Apple. Obviously, it can go either way. But what we have here right now, and I talked to you about this yesterday, we're below that 20 moving average on the daily of the spiders there. Same thing with the Qs. The Qs are not likely to get saved here in the next 30 minutes. We would need to pump up about $3 there on the QQQ, so that's not likely to happen. Spiders, it could definitely happen, all right? So, we're only about $1.50 away. So that could certainly happen if we get, a market on close bid. The triple Qs would have to get like all the way up into here. I think 377 was that at. Yeah, 377.28. So that would have to be a $3 pump. I don't see that happening. Now, it's only the 20 moving average, right? It's not like, this massive breakdown or anything, but it's an important psychological level. We've seen distribution twice now in the last 2 weeks. Really in the last week, actually last Thursday, and then yesterday, last Wednesday. So that kind of increases the likelihood of, if we pump up on Apple and Amazon, I would say increase the likelihood of a potential lower high. We now have, confirmed lower highs and lower lows on the spiders. Maybe we could go up and test this trend line tomorrow. And if that gets rejected, and you take this pivot out, then you're going down here. So, market's here in a little bit of a tough position. So the bull's not really stepping in to save it. We do have NFP number tomorrow too. And really the big story of the day is yields, right? TYX 30-year surging up three and a third. I've been talking about 4.2 to 4.25 for a while. We're at 4.3. So we've exceeded my target a little bit. There's a little bit of a pivot up here at 4.334. And the high of the day here, 4.325. So very close there. At this point, I would say it probably just wants double top if it doesn't pull back immediately here. Yields are getting a little crowded. Everybody's, it is a little bit, the short bond trade is a little bit crowded at this point, but it's crowded for a reason here. The big story right now, and we'll take a look here. Let's flip over to the yield curves. This is a big story here today. But we take a look at, there we go, 2s and 10s starting to uninvert just a little bit. Okay, so what is that? What happens then? Well, here you go. Here's 2000, and here's 2007. When this uninverts, that usually means the recession is getting pretty close. 3-month and 10-year starting to, uptick back the other direction. You can see on the daily starting to make a new high there. 5s and 30s flat now. And 10s and 30s, back to just 10 or so points, basis points inverted. So, again, there's a long way to go. It doesn't mean it's going to happen right away, but you're seeing that curve uninvert. That can signal that a recession is close. Also, the fact that the 10-year and the 30-year are the ones that are doing the uninverting suggests that inflation concerns are coming back. We've been talking about this, right, for the last couple of weeks, last couple of months. Crude, you're up 20% month over month. That's going to account for 0.2% of CPI, just crude alone. UGA did come down pretty sharply off the highs here, but take a look at May 4th, all the way up to, from low 50s to low 70s. That's going to matter. Commodities, DBA, look at this run it's been on. Okay, so these are the things that I think the market's starting to come to realize. And again, bonds, a little bit crowded here, possibly to the short side, but they're crowded for a reason. We've been talking about this for a while. We're not bearish yields here, and won't be bearish yields. If they do pull back, it's not going to last very long, and there's higher floors in them. But right now, spiders here, looks like we're probably going to lose that 20 moving average again. I'll try to take you as close to the bell as I can, but we'll see. Either way, those are the levels we're watching here. We get up into this trend line, you get back above it, then there's nothing to say that we can't go up to 462, right? So it's not that far away. And again, like I said yesterday, a lot of the time that first distribution usually it's not a major, it's not the be all end all top, right? Usually you get some type of a pop, whether that's a nominal high, whether that's slightly new highs, whether that's a lower high. Usually you get some type of a reaction off that. So I wouldn't rule anything out. Again, Apple can save the market. It makes up like 12% of the NASDAQ, and that's even post the rebalancing that they did. So it can be a lot here. Again, NFP number tomorrow, if that comes in favorable, Goldilocks, the market can still get a bid. But these are the levels we're watching, and we are seeing chart damage take place, as we've mentioned. Triple Qs here, fractionally lower they are, not down as much as the spiders here, but again, looking at the daily, this is definitely weaker, right? We never made a higher high, unlike the spiders, unlike the Russell, unlike the Dow. So NASDAQ on the weaker side. I think you're just seeing distribution here and rollover. By the way, speaking of distribution, these semiconductors, look at Qualcomm today. We had TSM report a few weeks ago. Texas Instruments, AMD reported. That is coming off the lows, though, after getting hit yesterday. But some of these semis are a little bit on the softer side, and I think this market's, it's going to be very interesting to see when NVIDIA reports. We're not seeing that AI chip demand. We're not seeing much chip demand at all. And it's going to be interesting to see how the market reacts when investors realize that it's going to take years for this AI thing to actually play out, and there's no hope of NVIDIA turning those chips into profits anytime soon, especially with their valuation. But in any case, triple Qs, again, we're seeing some rotation here. Again, what sectors are holding up today? KRE, XLE, XLV is lower, but holding that 20-period moving average there. The sectors we thought would be stronger here are stronger. Lo and behold, XLF green. So financials, energy, healthcare, rotational sectors there. But right now, again, we're below that 20 on the Qs. If we continue lower, there's your next level. It's pretty simple, very easy to see. Got a lot of chop in this area, so that theoretically should be support for the market. Resistance now, you got to look to 380. If you can't get back above 380, then that's probably where you're going to go here. There is a gap up at 383, and then of course that previous old trend line could be a potential area as well. Again, we'll have to see how the market reacts to Apple and Amazon, and as well as that jobs number tomorrow. Russell 2000 here today, down 14 basis points, still holding trend. We did make a slight lower low, nothing crazy, you're not taking it out, but we did make a slight lower low. So now if you get a lower high, you can put in that daily chart, lower high, lower low pattern like we talked about yesterday. Still holding the 20 though, and we thought, we figured that would happen, right? Russell's got a lot of banks, a lot of energy in it. That's going to see rotation. I still can't rule out a move up into the low 200s on IWM, but it is holding the 20 right now, and it's hanging in there. We'll respect it. Dow backing off a little bit, down just 34 cents. Nothing terrible, nothing major there. That is still holding trend. You lose the 20, then we'll talk about maybe 345 or 343, but for right now, it's fine. Semis, we already talked about. Trend line finally broken. That's been going on for 2 months now. June 6th. And what a steep trend line here. We start to take these levels out. You take out 150. You've got a few pivots here and there, but there's, like I said, there's a big fat air pocket down here on the semis. Let's extend that out there. A trend line there as well. Previous trend line going back here. But right now, double top's holding. So a little bit of reversal there on the weekly. Need to see follow through though, but semiconductors finally doing a little bit of chart damage there. But again, 150 right now is kind of the bigger level if you ask me. IGV lower as well, so confirming that kind of downtrend there on the daily. Next level, you have a little bit of a pivot around 346, 345, 346, and then the 50 moving average. So right in this range here. Back above 355 would give you a little bit more of an upside bias, but again, we now have lower highs and lower lows there, so just be aware of that. You could make a case there's kind of like a trend line right here going down. We could put that in. Just a short-term trend line, but something to watch there on the IGV. If you can't take that out, that could give you the catalyst for another push lower into that low 340 area. Dow Transport's holding up, again, back below that ridiculously steep trend line. Actually green on the day, up just about 20 basis points, nothing crazy. Still inside of this green bar here, so no real problems. It's holding up okay. This trend line was just really steep, so no surprise that broke there. But again, you're still holding the 20, you're still holding trend. Again, a corrective move would take you to 15.6. You get back above these levels here, we'll just call it 17. So 17 is going to be the level that I'm watching on the DJT. Interest rates we talked about a little bit already, but I'll just cover we'll give a brief rundown here. 2-year, 4.89. So again, kind of flat on the day. It's been really choppy, really sloppy. So again, it's the long end of the curve going up here, signaling some inflation expectations are increasing. 5-year, 4.3. So nice push up there. We talked about the nice inside bar yesterday, and it's getting a bid off of that. 10-year, it's back to levels. This is back to where the market reversed, in March. And this is where we bottomed in October. We're now testing those levels. It's not a good thing. 30-year, we already talked about, obviously. I think at this point, if you don't pull back here, it's probably up to double top for the 30-year yield. Onto XHB and housing. A little bit of a sell here. This still just does not want to go down, though. It is down 1%. It doesn't look like it, but it is. You got to really take these pivots out, and then, first the 20 moving average first, then you got to get through these pivots. And then you even still have a lot of support here around 80, 80, 50 on XHB. That said, on the weekly, it's pretty stretched, right? So even though there's some daily chart levels, you didn't build any support here on the weekly. So this can go down really, into that 20-week moving average. And there's that bigger trend line. Again, this is all assuming that we even put in a top here, but these names are really long in the tooth here. Interest rates rising at some point, that will matter for home builders. It hasn't mattered for a long time. I think that in my opinion, this whole thing is just a big short squeeze. Everybody was long rates and looking to short home builders because of long rates. And sometimes it takes time for that to play out. And when it doesn't play out in time, you get put decay and then dealer buybacks, etc., and these things start to squeeze up. That's my opinion. But right now, still holding trend. ITB did lose the 20 moving average. You got to get through this pivot low here. And then same kind of thing applies. You go to the 50, you go to this pivot here. But again, weekly, really extended. So at all-time high, though, so we'll respect it still. VNQ, disappointing here. So pretty good dump, down 1.18%, but it did come nicely off the lows. You have a decent tail candle there on the daily, and it held support. So 83.24 was our weekly green bar low. We're above that. We'll have to see where we close tomorrow. If it closes below that, it's going to be a sign of weakness there for the VNQ there for real estate, for REITs. But right now it's holding up. And again, like we tested this trend line, we back tested the support level I talked about. Low of the day was 82.59. And we're off of the lows now. So again, we'll have to see the weekly close tomorrow. It will tell us a lot more about REITs. And then XLF here, we talked about already, up 10 basis points, still holding that 20 moving average. That can still get to 36.20, 36.25. KRE still holding up. This pattern is not broken. That can still go higher. Same thing with KBE. That's not broken. And broker dealers also holding up okay. That can still get all the way up to 530. Still really overbought and extended, though. All right, on to energy, we already mentioned. Crude, one-day pullback and then right back up there. So crude showing a lot of strength. I still think it might need to do some backing and filling. I don't expect it to close above this level tomorrow. If it did, the lows are likely in. I'm going to say that it's got to close above 83.50 just to be safe here on a weekly. I know this was the previous inside bar, red bar low, but this was that pivot. So I'm just going to just be safe and say 83.53. If you do that, though, the lows are in on crude, and I don't mean like the lows for the rest of the year. I mean they're lows for a long time. So crude continuing to show strength here. I'd like to see some more backing and filling, but that pattern's pretty good. XLE also holding up really well. I like energy here. As you guys know, XOP hitting our trend line. That could do some pulling back here. A little overbought, a little extended here short term, but can't really say anything bad about it. It's holding up well. OIH also holding trend. That's still going to 360, 370. Nat gas rebounding after a little dump yesterday. Inventories coming in favorably. And we're still inside of this channel here. Never quite got down to this trend line here. We'll see where it closes tomorrow. You get a close above, anywhere above 260. I think that would give you a pretty good looking weekly candle there, but nat gas hanging in there okay. Dollar index. It's holding up. Look where it is, 102.55. What's my weekly level? 102.56.4. And we're right there. So tomorrow you close above that, it's going to be a huge positive for the dollar and a big negative for markets. That's really what I'm going to say there. It would also give you a weekly close above the 20 moving average for the first time since May. But that negation of that red bar, breakdown bar, is a big deal. And if that happens, again, it's tomorrow. The non-farm payroll might come in cold as hell. No pun intended, but it might come in cold, and we could sell off. But if we get above that tomorrow and we're closing above that, I think you got a bear trap case in the dollar index. So something to watch there. The dollar's rip-roared back to the upside. Looked like it was going to break down, but it's held up here, so we got to respect that. Goldilocks here with, just kind of a flat day, nothing terrible here, trying to hold that 20 moving average. If it starts to dip down, again, we got to watch this trend line here that coincides with the 200, and then I think 1850 is your bigger level if we have more of a corrective move. Silver kind of violating this trend line a little bit here. This is oversold here short term, so it probably gets a bounce, I would say probably even into tomorrow. We'll see. And it's almost like it's kind of essentially back testing that trend line again a little bit. You are still holding this green bar, but back below the 20-week moving average. We'll see how it behaves here tomorrow. That's going to be an important close there, but silver retracing that whole pump that we had from a few weeks ago. Platinum here lower, so again, same thing. Maybe a little bit of a micro kind of falling wedge there. You kind of throw on the 4 hour. Yeah, you could see kind of like a little falling wedge type look there on platinum. So that may get a bid tomorrow too. Again, silver, like I just said, is a little oversold short term. So metals may get a bid into tomorrow, but I think this has one more lower low to make. I'm not quite doing anything with it yet. Palladium's still hanging in there. That has not changed. Copper getting a bit off of that little trend line. So we'll see. Maybe, I don't expect it to push back up here, but it could. So it held this level for now. You reject this one again, it's probably going to break down here the next time we come down. But it's hanging in there for now. All right, lastly, Bitcoin here. A lot of nothingness. So it looked like we were going to do something the other day, and then right back in this range. Daily chart, not the greatest, but the weekly is fire. So I really like it. Full disclosure, still have some Bitcoin here that we picked up. I like this pattern. If I don't buy this pattern, then I don't know what I'm doing with myself. So I like Bitcoin here on the weekly time frame. If it changes on the daily and it does enough damage to the weekly, then obviously that can change. But there's still a lot of support here, 28.5, 28.6, and really even in like the mid 27 area, there's some pretty good support there. But daily chart softer, but the weekly, I mean, that's about as good as you can get. So anyways, okay, so 3:43 p.m. Let's look here at the spiders. Looks like we're going to lose that 20 moving average there unless they come in with a market on closed bid. What does that mean? It just means that I think you probably favor lower highs on a pump potentially. On Apple or whatever the reason, doesn't mean we could sell on Apple, and then Monday we could pump. If we get a bounce, I'd say it increases the probabilities of a lower high at this point, because now you have to get through this trend line. You've got this gap fill, you've got this reversal bar, and if this is strong, it should be able to hold the 20. Essentially, is what I'm saying here. But either way, watch that. Into the close, the Qs are going to lose the 20 moving average. 380 will be important tomorrow. Important level to get above or below. And then on the spiders, obviously the 20 DMA is going to be a psychological level going to tomorrow as well. But really into next week, we'll look at that trend line. And again, we'll just have to evaluate it once we see the news after hours, and of course the NFP number tomorrow. Anyways, guys, gonna wrap up here. You guys take care. Come find me at carnivoretrades.com. I will talk to you guys all tomorrow.